Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market lost ground last week as investors focused on the deflationary forces revealed in the energy market. Still, the pullback for the market was modest after a huge 30% rebound the previous 3 weeks. Monday saw an acceleration of the historic crash in oil, trading down to about $11 overnight. The market actually wanted to recover on Monday as Amazon drove the NASDAQ almost back up to even, which was amazing after the big decline that we saw in the markets and in energy. And the dollars continued to fly into Amazon and Costco and Walmart and the tech stocks. They all benefiting from the lockdown. So the market really tried to come back. But oil crashed even further. And the holders of the May contract absolutely panicked. I've never seen anything like it, not in 45 years. As they moved the May contract down as low as negative $40. I didn't even know they could trade negative, to tell you the truth, and I don't think most of the world even understood that either. But what happened was that holders of the May contract were desperate to get out, because if they couldn't get out of the contract, they would have to take delivery of the oil. And where would they put it? In their living rooms? Everything is filled. All the storage is filled. All of the ships out there holding oil is filled. And there was nowhere to do it. There was no buyers for it. And the prices just went crazy on the downside. Again, never saw anything like it, as low as minus $40. That pulled down the whole complex. And then on Tuesday, oil continued to weigh on the stock market. The June contract then plunged all the way down to $6.90. It did rebound, though, but the fears were huge that it was going to go negative, and that might still happen. But then stocks on that day, on Tuesday, made the lows for the week. Wednesday saw Trump order a shoot and destroy as the Iranian vessels seemed to be harassing the U.S. ships, and that sent oil back upward. And that started a rebound in oil and a rebound for the stock market. Thursday stocks, they ticked up. S&P 500 was up almost 40 points, looking like a strong day. But then a report came out that Gilead's drug remdesivir, which had all that positive press the week before and caused the market to stick up because there was a good test out of Chicago that said that they were giving that to patients, and it was shortening the coronavirus time frame and making it so that it was less powerful. And all of a sudden, the news came out that Gilead had failed the test for remdesivir, and that sent Gilead stock down, and that sent the market down. The market lost the whole gain pretty quickly, and that was a pretty good disappointment to the bulls. Later on, Gilead came out and said that who kind of jumped the gun on that there was just not enough enrollment into that test, and it was kind of inconclusive, and therefore there may be more to come yet on remdesivir. But right now they're labeling it as a failed test, and that had the markets disappointed. Friday, disappointment or not, stocks did stabilize, shaking off some poor guidance from Intel and some news that Google is going to have big cutbacks. that makes sense because with businesses struggling in such a giant way, their advertising budgets are going to be gone. I mean, sharply reduced or gone, and that's what Google lives off of. So it makes sense, and I think Google stock is going a lot lower. So down the road, I'm going to show you Google and show you why I think it is so bad. So stock market investors certainly are feeling some relief after that big rebound. I equate what happened to the markets, where they had that 35% decline in less than 4 weeks, as being hit by a nuclear bomb. Massive damage, attempted mitigation at the periphery, can't even really get near the site yet, and there is radiation and contamination. When the smoke does clear and the radiation clears, the contamination, then you can really get into the site and see what's left and begin to clear it and hope to rebuild, at least start to. But that world that people knew, well, changed forever. And that's what I say right now has happened, a reset. Now, once we really get a picture of the rubble, of the crater that has occurred from this double chaos, this double crisis that we're having of the COVID-19 crisis and a financial crisis, investors will realize that there is a long road ahead to heal. Right now, well, living on life support, or government support, as you might call it. So yes, this is a reset. Many companies will be gone. Survivors will be operating in a much reduced way. Employment's going to be sharply reduced for a very long time. And earnings, well, they're going to be much lower if they even exist. And that means that they're not going to be pumped anymore, not the way that the government has been able to do. Yeah, for a little bit here, some of these companies that are benefiting from the crisis will show better earnings, but reality will set in. And that reset is going to really become apparent as the stock market now, I believe, after this decline it had, is still way overpriced. And I think that's true, even if you have a 3-year horizon. So looking down the road, well, it's a big dark valley, and there is a lot of rebuilding to do after this bomb hit the markets and hit the economy. So those of you that are optimistic about this recovery and optimistic about, well, at some point, the lockdown ending in our country and getting back to normal, it's going to be a very new normal. And if you think the stock market is going to be able to do what it did these last 11 years, well, think again. I've been warning about this, and I'm putting another one out there. This rebound the market's in, it is a gift. Stocks for the week down about 2%. Bonds, 30 years, they gain about 1.25 points. 10-year yields down about 5 basis points, now yielding 60. In that panic, they got just below 40 basis points. So 0.6% right now, just amazing. And that might even be going to zero or less, depending on what this government decides that they have to do. The gold market, the rally, it was having a giant rally. Now it pulled back a little bit today after being up. About $33 gain on the week. Silver much weaker at losing about 15 cents. And that gold-silver ratio near historic records at about 114. That is absolutely amazing. And that's because of the debasement of the currencies. And that gold, which is a currency, is where things are moving, where money is moving into. And silver, which is more affected by the economy, is weaker. That's why we have this historic gold-silver ratio going on right now. It was up to about 120, so it's come down a little bit, but it is significant. I do want you to go to our website. I published a video that you really need to see on gold, and actually you could see it now on YouTube, and it makes some comparisons of the currencies. And this is a must-watch if you have interest in gold and currencies. I think it's just a fabulous, just about 11-minute video, and it's free to you right now. So go on YouTube and you'll be able to see that. Dollar gains about 0.6%, and gold is going up when the dollar is firmer. So that shows you a pretty good relative strength there. Oil loses about $5 on the week. That's looking at the June contract. It was down $18 when it got down to that $6.90 low. And with this rebound going on, I don't have a lot of hope that we're not going to look at another downside panic in there when we get closer to the end of this term of the June contract in there. So that is a look at our opening here of the show. Please do go to the YouTube and subscribe, follow me, and share this. Be a person that gives me a thumbs up, and you really will help us by that, because it helps us get better ranking on YouTube when you give us a thumbs up. Make sure you subscribe to this channel. Share it because there is tons that we put out there every single week. Follow us on Twitter at askSlim. And then for our trial memberships, or for other questions about our website and memberships, write to Matt at askSlim.com. All right, so right now we're going to get into the best and the worst stocks for the week. What I do is go through my 300 plus stock universe and look at the cycle analysis that we do. That is the core of our analysis here at askSlim, where we are really do our best to raise your odds of success by sharing our analysis with you. And we do that through many different areas of the website, plus 500 some videos that we have in our library that you can have as a subscriber. So now let's take a look here as we look at the best stock for the week. The best group were the oils. They had massive rebounds after getting so slaughtered. Would you guess that the best gains for the week would be in oils this week after getting absolutely killed as oil was moving down? Here's a look at Apache, up 39% on the week. You can see that it looks very much like it's going to keep moving to the downside in there. I'm going to show you a couple other stocks in this group. This calls for a decline out into June-July period. Halliburton, you can see in here, this has a beautiful picture of our cyclical analysis. You can see this dark line right over here shows you a cycle which is measured from low to low. Here's another one right in here, and that projects to this low out over here in July. This dash line is the OIH. That's the cycle rhythms for the group. And you can see that this rally came perfectly when this rising phase. You can see the rising phase, and then the declining phase, which brought you that big decline there. And then this area out over here is a big declining phase also. So this area of June, July into August, a lot of risk out that way. It came up to the sell zone right over here on this rebound. I mean, the rebound really doesn't look like much when you think about it. That this stock moves up 31% on the week, and look what it's done. It came down from $55 down to $4. So when you talk about that kind of a rally, that's not very much when you look at that, as the stock gets up close to $9. Big deal, right? And the stock could easily be down to $4 or less. As we look into the summertime there. So Halliburton, 31% gain on the week. This is just, bounces that we see in here, not anything all that hugely significant. And look at Devon. You can see in there, it looks a lot the same thing. You can see that it is looking like it gets into that lower resistance sell zone and likely to turn down again. This stock from $47 all the way down under $5, now rebounding up into the 10s. But again, we think into that period of July, it is likely to be moving back down towards those lows. This is what we call synchronicity, or the principle of synchronicity, where I'm showing you Devon coming down into the same time frame that I showed you that Apache was like, and Halliburton was likely to come down. So they do trade together as a group. That is the principle of synchronicity. I can show you that again as we look in the golds, because gold had a good week and gold stocks moving up. Look at this beautiful chart in here. We call cycle analysis an art form, and you can see as I've painted on this canvas the beautiful cyclic action that's in here. So what we're looking at are multiple cycles, and you can see I have GDX in here and AU. Those are the cycles as they overlap each other. And then these minor cycles right in here. So this bottom is due here in late May, early June. We actually think gold is going to be still, in a modest corrective period into that period and then moving up again. A very, very visual picture of a broadening top or megaphone top. And that kind of projects it out to 30, 31 out over here. Before then, it probably rolls over. So I'm a buyer around 24, and then I would be a seller up in their area of about 30 based on this pattern in here. But AU gains 19% on the week, a good one. Gold is interesting because this is an example of us putting out a trading idea that didn't work. We believe that this stock was extremely overbought. And so what we did was we shared our analysis and suggested that a short side bias was the best idea. The thing is that what we always do is put in an area where we look at it again, and it got through that area. So we had to remove that short trading idea that we put out there. That's just what happens when you get something that has massive momentum. And you can see in here the momentum. This is the Hull moving average right over here, which is our momentum indicator, and actually moves very, very nicely with the cycle rhythms, as you can see. And so that's still moving up. Momentum still strong and gets up here to 28.5. So 11% gain on the week. And a massive overbought condition in there that is beginning to get it to pull back, but it did spike up through the level where we do look at it again and say, well, we just got too far, so our analysis is not correct. So that's what we do. We just pull it when that happens. And believe me that our favorable trade ideas there are many more than them than are unfavorable. So that is a look at GOLD. And now one more we're going to look at in the best of the week is ETSY. This is a stock I liked. I really liked it a lot. So there is the weekly analysis right there. And this is really pretty. So I liked it after the head and shoulders top. You can see the head and shoulders top in here. One of our videos out of the 20 in our cycle analysis workshop talks about how cycle patterns make chart patterns. And you can see in here the cycle rhythms that made this chart pattern right in here as you had a left shoulder and a head and a right shoulder. The distance from the top of the head to the neckline is how you get your measurement. So we put these parallel lines in here, and that projected down to coming to this level right here, which you see it made, and then got even worse. So once this bottom was in place here and we got this rally, I kind of thought that the stock was in good shape. I liked the way it was trading. But then when the liquidation hit in the stock market, it traded down much lower than I expected it to. But I guess liking it was really right, but I got shaken out. And this then moved up to a level higher than this. And now it's in really a good shape right now, as of course online retailing is something that's doing quite well. So this stock, they don't earn any money basically, and the price of it is really high. So we only give it some modest upside in here. Based on the formations. It's a very high PE that you see in here. So pattern is suggestive of a pullback in here to about 57, maybe one more try up there, but in the meantime, with these resistances up there, I'm not loving it. It's really perfect cyclical patterns. I liked it before, but not at this level. I mean, it's just too expensive, and I would expect that this exuberance we're seeing in here by the investors is really overdone. So that is a look at Etsy, and a very, very good look at our best stocks or the biggest movers for the week. So now we're going to take a look at the worst of the week. And there's a number of stocks in here that are very familiar names. The retail group was the worst by far. That retail group saw a very, very large break again in a lot of stocks. Macy's, Gap stores, Abercrombie, Urban, Kohl's, they were all down between 12 and 16% for the week, on top of a total decimation that we've seen. Let's just look at one of them in here. I'll go from the Etsy, which is really an online retail, to A&F, Abercrombie, which is, of course, a big box retailer. And the big boxes, they're in big trouble. And of course, when they're in big trouble, so is commercial real estate and real estate. So I'm going to show you in a little bit a picture of the real estate markets as we look at our investor pulse. So it's something that I think is very interesting. Real estate those have had a bounce. Along with this little bounce, they bounced more. And now they're probably giving us a good sign that they're going to be done for on the downside. But we're talking about Abercrombie right now. Abercrombie for the week down 23%. And it is in a bounce. I laugh at that, to tell you the truth, because here's your bounce. It didn't get down to 742 again, so it could move back up here to the sell zone. But you could see the value of these resistance sell zones. And here's a gravestone doji, which is just a very, very bad looking you call it gravestone or tombstone. It means that it opened up, buyers came in, the sellers came back, and that declares where the sellers are right there. And that was the beginning of this big decline. Note the rhythms in the cycles and how you get the rally phase and the declining phase right over there. And once you broke down under this level right over here, that was an area for free fall because that was a negatively configured cycle. It did the same thing right there. As you can see, we have that mark for you. So once it broke under that level, free fall. Broke under this level right over here, free fall. And if it gets under 742, well, that's going to be a free fall. How much lower can it go? Well, it's probably going under $6. That would be my guess. Guess what? Sometime in July, maybe August. So that's where we have our big decline coming in the stock market. And you'll see this synchronicity as we get the alignments in here. Boeing down 11% on the week. That one is in the news all of the time. Look how horrible these cycles are in these patterns. There are two out-of-phase cycles, both in play in here. We have a minor and a dominant cycle, and they don't perfectly line up. Sometimes that happens. It's called out of phase. Still, we look for the important actions of those cycles, and you can see that this dominant one right over here, which we have the dotted line in, points to the downside. In other words, saying this sell zone would bring sellers, and you can see that happening as it's doing that. And this one points to this decline over here out into late May, then a potential bounce again, and then more declines out over here into August. The news on this stock, well, the airlines, number one, are in just in a total chaotic condition, begging for money from the government when they spent billions, tens of billions on stock buybacks. So they shouldn't get any money unless they sell their stock, unless they sell bonds. I don't get that. But Boeing suffering from that. Also, more delays on the 737 MAX and cutbacks now on the 787 Dreamliner, because these airlines are just not going to be able to afford these airplanes. So this Boeing pattern is still very bad, and you could see it's barely rallied compared to the rebound that we saw in the stock market. Let's go back to talk about Gilead, which we mentioned, GILD, as we open up the show. You could see this huge upside movement that was going on in there when it broke out of that triangular formation. You can see that, and then it gapped up over here, and then had a big rally. It hit this buy zone right over here, had another big rally, and then pulled back on this remdesivir news. This stock is probably going to be chopping around in here, maybe as low as about 73. It's now trading about near 78, so we don't give it a lot of downside. This cycle right here, you could see the cycle declining phase. It's got about 4 or 5 weeks to go in here. You'll note in here the last cycle in here fell for about 6 weeks. This one fell for about 4 weeks. This one fell for about maybe 2 weeks there, and this one was very steep right there. So this is an area where you would expect it to pull back. The remdesivir is not a miracle drug, and the people that bought it up on this upward panic really got hooked on the news in there. So you're going to need a lot more testing. It's a long way from proving this or any drug or coming to any vaccine. So this one may still get a lot of up and down action in here, but if you wanted to buy it, I think it would be closer to $74. Definitely disappointment over the remdesivir recent trial. Target moves down this week. It moves down about 6%. Analysts downgrade the stock, talking about that they really benefited from the huge stock up everybody did in groceries. I've been actually ordering from them and using their Shipt, SHIPT, shopper service. It's really, really good. I got to tell you that. And the problem is that the question is, now that we've gotten here, what's really next? And for those of you that study cycles, what you can see in here, what happened was that these are called cycle configurations. When the configurations are positive, in other words, they finish above where they began, and they hit these buy zones, they really continue to move up in a big way. You can see in here the same thing. I'm just going to grab this arrow, and you'll see there were 3 in a row right over there. Then you got this cycle low right over there, and what happened was it broke down. It went below the previous low, and when that became negative right over here, as you can see, getting below that cycle, we have it marked by that blue note. The cycle breakdown is negative. The probabilities are very high of failure in the next resistance zones. These are created by our swing high, swing low analysis. We have several videos in our library about swing high, swing low analysis, and also in the cycle analysis workshop. So that's how we come up with these sell zones and the buy zones right over here. And you can see they are very reliable. And that stopped at the point where it really should, and it really points to these cycle patterns. Now we have Target and Walmart overlaid on each other, that there's likely going to be some pullback out over here into this June-July period, which of course is what the rest of the market looks like. So I don't want to be redundant, but I'm going to be redundant. There's trouble out there in June and July, maybe August. So now let's take a look at the last stock, which is not a big decliner, but I think it's significant. This is Intel. Intel comes out with earnings that were pretty good. Their guidance, though, was very weak. And news came out from Apple that they're going to make their own chips for the Mac. So that is a good reason to believe that this negative pattern that you see right over here is going to continue. And you can see our projections in there. We project in time and price based on the sum of the evidence. The sum of the evidence in here says it's going to fail in here. That's the right spot. Pull back here maybe into the low 50s, get some kind of a rally here, and then a big decline out over here again into August. So this overall is a bad pattern. This recovery here is an opportunity, I believe, for long side sells. That is a look at the best and worst stocks for the week. And I'm sure there were a lot of good things in there for you analytically that you can then put into your own toolkit to become, of course, a better analyst and improve your trading. Talking about improve your trading and investing, I want to tell you right now about our special on level 1. We're running a special trial for our level 1 membership, and I'm going to show you a lot about what's in here, especially our Slimulator Momentum Tracker. This is for really investors or position traders. It has a 3-month perspective, 3 to 6 months. And along with that, and I'm going to demonstrate that for you in just a moment when I do Investor Pulse, the weekly stock index report is what you get, which looks at all of our charts, and you can see our analysis, momentum indicators, everything on the S&P 500, NASDAQ, and the Russell. It is a very comprehensive report. The weekly ETF review, we look at the major spider sectors. The askSlim Market Week archive, I have hundreds of market weeks in there, and you're going to be able to go back and review and learn so much from the way I do analysis. And our Slim blog, we put up fresh analysis in there on a lot of stocks and futures and ETFs every single week. So all you have to do is be a level 1 member to have access to all of that. And our special trial for 1 month, just $14.50. All you have to do is write Matt at askSlim.com. And if you want to take a 3-month trial, he's got a great one for you in there also. All you have to do is ask for it. So this is our level 1 membership trial. All of this unbelievable stuff, just $14.50. So write to Matt at askSlim.com. So what I want to do is I want to demo that for you right now. Just the Slimulator Momentum Tracker, because it's such a unbelievable app that we have here that's included for just that $14.50. And I'm going to do that by looking at a particular group in here. And what I want to look at is the real estate group. But before I look at the real estate group, though, I think what I'll do is I'm just going to take a peek at the Slimulator Momentum Tracker and just give you a little bit of a heads up of what this does. You can do a single symbol search just by typing in something you're interested in, like Apple. And Apple, it will show you in here that it's a neutral stock that we have. How do we know that? Well, what it's showing you is a long-term intermediate momentum at neutral, and short-term it's got positive momentum. So it's really a neutral stock. It's just short-term in there. And if you wanted to save this to your watch list, you just click on this right over there, and this is just an unbelievably great way to understand the condition. The directional bias, which is has our proprietary formula, is neutral, and the investor outlook is the mixed conditions say to wait. So if I put up a stock like, let me put up a stock like Exxon right in here, and you can see what this tells you is it's slightly bearish, that the conditions also can say that you should wait for more messages. And why is it slightly bearish? Because the long-term patterns are still bad. It's intermediate neutral, and the short term it is in a positive momentum condition. But the dominant condition is this right over here, this long-term condition, and this is not an investable stock. Really what you would expect is that it would begin moving down again, and it would give up this positive short-term momentum and maybe even get bad all the way across. If you look at something like United Airlines, you can see what bad all the way across looks like. And this is no way that this is investable. It's just fantastic. Now, I just showed you the single symbol. Let's just look at the S&P 500. But you can see all of the canned groups that we have in here, including our focus list and all of these groups that you can just take a peek at and look at the same thing. I'm going to look at the S&P 500 because I want to look at the market condition in there. And you'll see in here, if you were an investor and you wanted to see what you thought about the market conditions, well, our directional bias has improved quite a bit. It's gotten pretty neutral, but the ones that have our directional bias in any direction at all are only 14% positive, 20% negative. So the market's gone kind of neutral, and we've seen that happen here as there has been a recovery. Now, if I look at long-term conditions, look at the long-term conditions are still really bad, only 14% positive to 65% negative. It improves as you, I'm just going to pause that feed because that's going to keep doing that on us. If you look at the intermediate, you can see that there's a lot of things that are neutral in there, and you're getting a short-term improving market in there as 49% of the S&P 500 are now in positive momentum. So you could see that as our analysis was changing, we were seeing these stocks improve. So you get a very, very good sense of the condition of the whole market looking at that. So what I want to do now is, as we're doing Investor Pulse, I want to focus on real estate. I'm going to look at the 3 most active real estate ETFs. And how am I going to do that? I'm going to go into the watch lists right over here, and I'm going to go to my watch list, and I put 3 of them in there, and I'm going to select that. And what you can see in here is the XLRE, the IYR, and the VNQ. And what you could see also is that a directional bias in here is neutral on all of these. However, the long-term conditions are negative, and that makes these all slightly bearish. And this the things in neutral, or this little uptick right over here in the short term, really is fighting against a really negative condition, in my opinion. I'm going to show you that. as I go through some charts here. So I wanted to give you a good idea of the simulator, and you can see that when there's so much information in here, it's unbelievable. If I happen to pop up the XLRE over here, you can see when there was the last changes. You could see the charts in here, and they show you where it changed to very bearish right over here. And if we have any notes, they'll show up in there. But in this case, I don't think we have any notes on it. So that's a real good example of all of the things that are in here in the Simulator Momentum Tracker. But now let's do some analysis as we switch out of this simulator into the one of the individual ETFs. We're going to look at the IYR. So I still have Intel up here. We're going to switch this to IYR. And I'm going to put up my cycle analysis on the weekly chart. So what you can see in here is something very interesting, and that is that it had been moving up pretty nicely, and I'm just going to go out here for 10 years so you can really get a picture of this. It had been moving up pretty nicely over here for 2 cycles, and then had this massive collapse. We talked about the real estate and industry, and of course business in trouble all over the place, and that's why you had this big crash in there. So I want you to see momentum turn negative right over here based on our Hull moving average indicator. And this negative momentum, despite the rebound, has continued. So this is in alignment with what we were saying about this entire group and about the stock market, that this has moved up about halfway back, and our projection is that this will fail and move sharply to the downside. Real estate, in my opinion, is in massive trouble in this country, and you can see in this picture right in here, it is very likely to be moving down in a significant way again. Now, I want you to look at this pattern, the big break and then the big recovery right over there. I'm going to go back here and I'm going to look at 2000 peak right in here where we had the 2000 bear market. I'm sorry, 2000. Can I get back there? I meant to go to 207, I think. There we go, right over here. So here's the 2000 bear market right in here. And you could see that what happened was that I'm on monthly. Let's just go to weekly right over here. Just going to change the time frame because what I want to show you is the period right back over here, the 2002 period. The same thing happened. You had this big break as the bear market hit, and you recovered back more than halfway, and it had this massive hit over there. So this is 2001, this is 2002, and the same thing, an absolute crash, a recovery, and then it continued down for a very long period of time. I'm going to show you the same thing as we move up into the 2007 financial crisis right over here, and you can see the same thing, a big break off the high for IYR. This is the real estate, iShares Real Estate Trust, and then comes back about halfway and then absolutely annihilated after that. So there's so many similarities in here, and that says to me here as we look at current time that this negative momentum and this halfway retracement back is saying that there's another big decline to me in the IYR and in the real estate sector, and that says a lot about junk bonds. It says a lot about the overall stock market, that there's a lot of trouble there. When I look at the daily chart, I'm just going to switch over to the daily drawings right in here. You can see right in here, it had nice positive momentum right during this period. The momentum goes negative right here as the slim ribbon turns red. You could see that down arrow, and then the collapse. So it gets below the important lows, the momentum is negative, and the collapse. And now you have this flag forming and the momentum going neutral. This is what was reflective as you looked at it on the Simulator Momentum Tracker. Once we get under here and that momentum goes negative again, there's a big potential for a free fall. So that is an important look at the IYR on the left, that weekly pattern right over there with the rebound, and showing you on the right here on the daily, making that bear flag and the momentum only going neutral there. That really is a picture of a potential large decline again for the real estate sector. And I thought that was really important to show you as we looked at that in our investor pulse. Don't forget that you can get the trial and get the this app and everything else that you see on here for only $14.50 if you write to Matt at askSlim.com. You just get in. It's kind of the way to step up and just become part of our community. And then you could look at everything else that we have, get an idea of what's on the site, the things we talk about, and then maybe you'll upgrade at that point. If not, maybe you'll say this isn't for me. It's fine. Just come in, take a look at it, experience this great app, and I think that you will love what we have there. All right, so now we're going to move into the final segment of the show where I look at the short-term view for the coming week. This I do by looking at short-term charts, daily charts, and look at the 5 major sectors that I look at, light crude, the gold, the dollar, the bond market, and the stock market. I rank myself usually, and this was another week where I was average at best, maybe 50 to 55%. I expected that the dollar would roll over and that the bond market would begin rolling over. Well, the bond market moved nothing but sideways, and the dollar market did not have any significant move either, so neither of those were really right, and the gold market partially right because it came down and hit our downside target perfectly, but then rebounded back, and it is up a little bit on the week. We didn't think it would do that. We thought it would start to just erode down a little bit as it corrected into May before what we thought would be a big upside move. So now let's look at these 5 different charts and get a sense for what we think is coming in the next week. I'm going to switch over to /CL and we can look at this devastating move in here as I switch over and show you this light crude. So here is light crude, and you could see this crazy downside move to, I thought it was 690. I guess it was 650. You can see that. Close enough. And here you can see momentum negative right over here at $56. All of these sell warnings coming on our projection oscillator right there, and this big downside move, this rebound into the sell zone, and then down again, and now this very early bottom that says there's likely another move down. So what I think is going to happen is they're going to get really nervous about the from the June contract, and that it's going to get sold very hard again. And you can see coming up to that sell zone, this points to about a week and a half on the downside. The momentum is just unbelievably negative in all time frames. We're looking for a down week in here. It might try to get up here to $20 first. It's possible, but then roll over into this period of first to second week of May, with some maybe scary downside movements coming in there again. Patterns are terrible. There is just a lot of risk out there on the intermediate patterns also. The problem with storage is going to keep these prices under pressure for a long period of time. And I don't care if the president says how many boats he's threatening to shoot. It's not likely it's going to be able to help this very, very poor supply-demand situation that exists out there. And the real big issue is there's nowhere to store anything. So that's the oil story. Actually, the gasoline story is the same problem. The refiners are filled up to the gills, and that's why the refiner stocks have risk, because they're holding a lot of oil that just got cremated. Probably a lot of hedges. So with the gasoline market now running into the same problem, why would they want to produce any right now? I don't even have any idea, except for the fact that these countries and these companies need to produce to get money. So the situation in here is not great, and we're looking for a failure in here, and then moving back to the downside over coming weeks. Next thing we're going to look at is the gold market /GC. So here is the gold market. I'm going to switch over to another set of drawings right over here, which has them a little clearer for you right there. And you can see this great upward pattern that we're in. We actually thought that this decline would come down for a few more days. That's what confused us a little bit. We thought a down week, an up week, and then a down week. There's a lot of power in here, and this is where the momentum turned positive in here, the little buy periods that come in here. This is actually one here also, and this is a very powerful pattern. So it comes up, hits this fib extension, we're projecting it up in here into the 1800s, as you can see, and then come down. It's possible it would just give ground a little lower area in here, come down into our May corrective target, and then come up and hit that fib extension. So I don't know whether it's going to explode on the upside now, or it's going to roll over in here, give some ground, and then explode on the upside. But you heard me explode on the upside. Well, I think that is the highest probability, and the sum of the evidence is really saying that the intermediate corrective period only goes between now and sometime in around mid-May. And if the market can't go down now, and if the market, a gold market can't break when the dollar is strong, well, just imagine what's going to happen when the dollar gets weak. We're probably going to see gold make historic levels. So please do watch my video I did on Thursday, where I look at gold and compare it to currencies. That is, I think, a fantastic video. We released it actually on Thursday, and it's that clip is out there. I did it on Wednesday in FutureSpeak, and the clip is now out there on YouTube. So please do watch that. I think it's very informative. So really a good pattern in here. We're just projecting gold to be choppy in here, trading in a range 1790 to about 1695. While it finishes this corrective period, you can see silver's corrective period out over here, gold right over here, and that all says kind of wide chop with an underlying strength that could push it up at any time. Gold today had a good rally going. They sold it very hard, and now it's starting to come back. So it's kind of a little down day that's going on in there right now. Very favorable in there. Choppy market, range bound while it corrects this big upside move, and anytime it could move up sharply. Dollar, we were looking for it to come down, and it's trading in this big megaphone and now moving sideways in this smaller ranges that we see going on. Some of the evidence in here is just that it's likely to remain range bound with a small upside potential in that resistance zone, maybe up here to potentially up about 101.20, and a lot of risk coming down here to about 98. So the risk rewards really favor the downside in a much bigger way than the upside. Momentum is choppy. You can see it right in here. It went positive, it went neutral, it went positive again in here. And with the ranges narrowing, I'm not really convinced that positive momentum is going to do a lot for it in here. This is going to have to widen out some. And these cycle patterns, there are two of them both in play. You can see a low here, you can see a low here, a low right over here, low right over here. So all of these are in play significantly. So we're going to look for this to take hold, give you some kind of a down week, another rally, and then maybe this is the area out over here. Remember, we said May is the time that gold moves up big. This really looks like the time the dollar breaks big, and that would be a perfect inverse correlation that's setting up in there. So we're going to look for gold to just be, again, in this kind of choppy area, minimal upside, more downside risk over these next few weeks. Next thing we'll look at is the bond market /ZB. So we were looking for it to erode. It actually just moved sideways in here, as you can see, with maybe a minor upward bias. Momentum in here is still very strong. Momentum got strong way over here. The slim ribbon had this whole thing on the way up. All kinds of buy signals or add to long signals that you got in here. The intermediate patterns suggest a decline over here into sometime in May. We have raised our projections based on the deflationary forces. When oil crashed, this started to really firm up, and that makes sense. So we're looking at deflation, so they're buying bonds. And so our targets have been raised now to where we're projecting down to here around in the 75 area to potentially down in the 71 area, and that comes over the next few weeks. So very little upside potential, more downside potential, and that's why I have been talking about my own short position in here, which you can see has not paid me any money yet. Because it's just not working yet. So as time goes by, the opportunity window closes. And that's what's happening in here. But sometimes the final stage of it is very steep. And you can see that right there. As this cycle came down, well, that's what we're getting right in here. And I'm just, making a informed decision that there's the potential for another one of these slaps on the downside that may only last maybe 5 to 7 days once it does start to hit. So bond market risk rewards favor the downside in here. That's especially true if the market stays firm as we expect. Speaking of that, let's talk about the stock market and the S&P 500 now. Stock market we thought would have a mild correction. We thought it would come down and that it would touch the area of about 2730 and then try the upside again. Well, that was a perfect bullseye. It was a really, really nice week where it followed the projections, the patterns very clearly. And I just, every week come in here and I just tell you what the projections are based on a pretty formulaic look at cycle analysis. So that's what I show you in here, and it was really an excellent week regarding the cycle analysis. Let's take a look as we switch over from the bond market and look at the S&P 500, and you can see the formation in here. The thought was that because this formation and this rally lasted so long, and because momentum had turned positive right over here, that this would then have only a modest few-day correction and then begin to move up again. This low right over here was right around this area. What was that actual low? It was 27.27. So we were very, very close there. And you can see it gets down into the slim ribbon. So what happens now? So now we've made the bottoms that you see right in here. This was the new shifted cycle projection. This is the old one that we still have in there that was running these 20-day patterns. And the pattern now is in these rising phases. The question is, how good is it? You see this 27.27 low? If it gets below there, there's a lot of trouble. In the meantime, we're in this early in this rising phase, which has the possibility of getting up to 29.40. This high right over here, you see at 28.79, has a good likelihood of being taken out on the upside. Now, what I said to you last week was that, when we come down in here and then rally, we learn a lot. We're going to school right now on this rally right in here. How strong is it? Can it get an upward lift, as you see in the beginning of the cycle here, and then continue? Or is it going to reestablish the bear trend, which is like this? An upward lift hits a sell area and then comes down and breaks the key low and then gets creamed. It could be somewhere in between there, but this is really what the time period in here that we're going to learn about the condition of the market. Upward bias likely. The normal movement would be a really bearish case, only 5-day move. The normal would be about 10 to 12 days on the upside. And if it was another really bullish cycle, it would look like this. You can see our projection has it peaking about halfway through and then coming down, which would be a normal or what we call idealized cycle pattern. So that is suggestive of the fact that we will have an upside week in here. We're looking for a modest upward bias with the potential of 29.40 on the upside, but we have narrowing ranges and we need to get some magnitude, some real buying coming in before we can be convinced. Upside momentum is good. Intermediate momentum has now turned upward, which is also good. And all of that fighting massive downward momentum coming from the long-term trends. When that happens, it should fail in these sell zones. So that's why we're not looking for any kind of a breakout in here, but just finding its way up here and then finally giving loose and having a big downside move again. Some of the evidence shows that we are in an upward correction in a big bear market, and that it is likely that it will continue for some number of days here, maybe even a couple of weeks, before it then begins to turn down again. We're just going to look for some kind of a chop in here and then a bigger break here into May. That is a look at the S&P 500 and our stock market analysis. I hope you found that everything in this show was very informative for you, that you learned a lot. Please do write Matt at askSlim.com about our trials in all 4 levels that we have. Go to the website, askSlim.com, and you can see in our memberships what's included, all the way from everything that we do, which includes my charts, all the way down to level 1, which is all of the things that I showed you before, including that great app, the Simulator Momentum Tracker. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been